Right now, Applied Digital Corp., ticker APLD, is trading at $19.425, showing a modest intraday gain of 0.39%. On the surface, this might appear as just another day of trading for a volatile tech stock, perhaps a slight upward drift in a sea of market noise. But that perception that this is simply a stock bobbing along with the tide is a profound misunderstanding of the tectonic shift happening just beneath the surface. The expectation is that Applied Digital is a company caught between two worlds: its legacy in the volatile crypto hosting space and its future in the hyper-competitive AI infrastructure market. The reality, however, is that recent developments, particularly its massive multi-billion-dollar contract with AI cloud provider CoreWeave, are not just tilting the scales, they are fundamentally breaking them, forcing the market to reevaluate this company not as a hybrid, but as a dedicated architect of the new AI-powered world. This isn't a story of transition anymore. It's a story of a deliberate, aggressive, and potentially lucrative conquest. Many investors still see the ticker APLD through a lens tinted by Bitcoin's price fluctuations, a holdover from its former identity as Applied Blockchain. They associate its fate with the unpredictable swings of the crypto market, a sentiment that might be managed on platforms like Robinhood or SoFi Invest, where retail trends often dominate. The common belief is that its revenue is inherently unstable, tethered to the fortunes of crypto miners. But the deeper analysis reveals a calculated pivot that has been years in the making and is now culminating in a staggering $11 billion contracted revenue stream from a single high-performance computing client. This isn't a speculative bet on future demand. This is a locked-in, long-term revenue commitment that completely de-risks the business model in a way the market has not yet fully priced in. The intraday movement, therefore, isn't just noise. It's the market slowly waking up to a new reality, one where Applied Digital is less like its crypto mining peers and more like a junior version of the data center REITs that form the very backbone of the digital economy. The stock's recent performance is a testament to this awakening. Over the past year, we've seen a surge of over 280%, with momentum accelerating dramatically in recent weeks as details of its expansion plans and landmark deals came into focus. Trading volumes have been immense, often multiples of the daily average, indicating significant institutional interest. This isn't just retail speculation driving the price. A look at the ownership structure shows that institutions hold a commanding 58% of the company. Major players like Hood River Capital Management and even BlackRock are on the registry. This is what we call big money moving in, and it's a critical divergence from the expectation that this is a fringe speculative play. This is institutional validation of the company's strategic direction. Platforms like Fidelity and Interactive Brokers, which cater to more sophisticated investors, are likely seeing significant order flow as funds build their positions. The recent lease agreements with CoreWeave for a total of 400 megawatts of capacity at its Polaris Forge 1 campus in North Dakota are the central pillar of this new reality. This deal, structured over a 15-year base term, provides a level of revenue visibility that is almost unheard of for a company of this size. While stocks like Nvidia stock create the powerful chips for the AI revolution, and giants like Apple stock integrate AI into consumer devices, it is companies like Applied Digital that are building the physical foundation, the AI factories where this revolution will actually happen. This distinction is critical. The market is saturated with companies claiming to be AI plays, but Applied Digital is one of the few with tangible, long-term contracts to prove it is an essential part of the supply chain. This is where the tension between expectation and reality becomes most pronounced. The market sees a small-cap tech company, but the order book reflects a future infrastructure giant. Let's be clear about what Applied Digital does now. The company designs, develops, and operates next-generation data centers specifically engineered for high-performance computing and artificial intelligence workloads. Its legacy business involved providing hosting services for cryptocurrency miners, primarily Marathon Digital. While this segment provided early revenue, it also saddled the company with the market's perception of volatility and risk. The strategic pivot has been to leverage its expertise in building out large-scale, power-intensive facilities and aim it directly at the voracious appetite of AI and cloud companies. Its new data centers are not your traditional server farms. They are purpose-built AI factories designed for extreme power density and advanced liquid cooling solutions required by the latest generation GPUs from companies like NVIDIA. This is a crucial differentiator. While older data centers struggle to retrofit their facilities for the immense power and cooling demands of AI, Applied Digital is building its infrastructure from the ground up specifically for this purpose. It strategically locates its campuses near abundant and often renewable energy sources to manage what has become the single largest operational expenditure: power. The cost of electricity is a major headwind for the entire industry, and APLD's focus on energy-efficient design and strategic location is a core component of its value proposition. This technical reality stands in stark contrast to the market's outdated expectation of a simple crypto hosting operation. Its business model has shifted from variable, usage-based hosting fees to long-term, fixed payment leases, creating a stable, predictable revenue stream akin to a real estate investment trust, which is something that platforms offering intelligent portfolio solutions like Schwab Intelligent Portfolios would find increasingly attractive from a risk-adjusted perspective. This focus on building a robust, predictable business is what sets it apart from the more speculative corners of the market. Anyone engaging in self-investing or looking for investment help needs to understand this fundamental shift in the company's DNA. Looking ahead, the future outlook for Applied Digital is a landscape of immense opportunity fraught with significant tangible risks. The primary catalyst is, without question, the successful execution of the CoreWeave build-out and the potential to sign on additional hyperscale clients. The Polaris Forge 1 campus has the potential to scale up to 1 gigawatt of power, meaning the current 400 megawatt contract could be just the beginning. Management has already indicated they're in talks with other major players, and securing a second anchor tenant would be a monumental step towards diversification and further de-risking the business. Another potential catalyst is a possible reclassification or restructuring as a data center REIT, which could unlock a lower cost of capital and attract a new class of income-focused investors, a move that would be celebrated by those using services like Fidelity Wealth Management for their individual brokerage accounts. However, the risks are just as real. The most glaring is customer concentration. While the CoreWeave deal is transformative, it also means APLD's fortunes are, for the foreseeable future, heavily tied to a single, albeit fast-growing private company. Any disruption to CoreWeave's business could have severe repercussions. Furthermore, execution risk is paramount. Building out data centers of this scale is a complex logistical and engineering challenge, and any delays or cost overruns could negatively impact sentiment and financials. Access to capital is another hurdle. These are multi-billion-dollar projects, and while the company has secured significant financing, its continued growth will depend on its ability to access capital markets on favorable terms. Finally, competition is intensifying. Digital Realty, Equinix, and a host of private equity-backed players are all vying for a piece of the AI infrastructure boom. Leave a comment below what you believe is the biggest risk for Applied Digital right now: customer concentration or construction delays. In summary, the narrative surrounding Applied Digital is undergoing a forced and rapid evolution. The expectation, rooted in its crypto-mining past, is that of a volatile, high-risk stock. The reality, supported by its massive long-term AI infrastructure contracts, is that of an emerging and pivotal builder of the digital future, with a business model that is becoming increasingly stable and predictable. The intraday stock price of $19.425 reflects a market in transition, one that is still grappling with this fundamental divergence. While the investment community, from those on the Robinhood app to institutional clients of Interactive Brokers, has begun to recognize the potential, the current valuation may still not fully capture the sheer scale of the contracted revenue and the strategic importance of the assets Applied Digital is creating. The story is no longer about whether the company can pivot to AI. It's about how quickly and effectively it can execute on a multi-billion-dollar backlog that positions it as a key supplier in the single most important technology trend of our generation. The tension between the old perception and the new reality will define this stock's journey. And for those who